There are 4 ways to make money as a mortgage loan officer, and in this video I want to break them down for you. Now the beautiful part is no matter when you're watching this, it's evergreen. They're going to be the same forever. And if you don't know who I am, my name is Zevi Shafran. I'm an owner of a mortgage shop in Los Angeles. I do these videos to help you springboard your mortgage career and hopefully try to help you make more money. And I do that by developing 2 academies, both of which are available for you via link in the description of this video. The first one is the Part-Time Commercial Lender Academy, which I'm very proud of. And then we have the Part-Time Residential Lender Academy, which I'm currently scripting for. Again, depending on when you're watching this, you're welcome to check both of them out in the description. Now, without further ado, I want to jump in and talk about you for a moment. How can you make money 4 different ways by being a mortgage loan officer? And it's tricky because these are things that I was not aware of. Even when I was a loan officer, I wasn't aware of them. And so I think it's important. Most of you jump into getting your NMLS license, which is great, but the one thing that's juggling in your mind is that once you do get that license, you're going to be looking at one type of a loan, all right? And that's called an agency loan, or QM loans, which is qualified mortgages. Now, the idea of this video is not to dig into the details of every single one of them, but talk about the overview and how you can profit from each one of these loans, all right? The QM loans is basically the type of loans that people use their tax returns and their W-2s. The reason they're called QM loans is because the total fees of the loan cannot exceed 3%. Otherwise, it's going to be considered non-QM, which is going to move over to the next bucket, all right? And I want to tell you a story real quick. This story is when I started in lending, I was working at the bank and actually was overseeing several different locations. The reason I did that was because I thought when people wanted the money, they would associate a brand like, institutional bank, right? And then I also thought that by being in the bank, the tellers would naturally send me business, right? Because every depositor that goes up there, and if they needed a mortgage, they would just send me the lead. None of that really happened for me. And as a matter of fact, I made a lot less money working at the bank than the opportunity that I had working as a broker. And the reason is, at the time, I was getting paid an average of about 0.5%. And to be quite fair, I'm not sure that really has changed a whole lot. And so if I was gonna jumpstart my lending career, I would highly consider having conversations with whomever is hiring me, whether it's an institutional bank or a broker shop, about what my end commission is going to look like. And I can tell you that the average comp plan for a broker shop is anywhere between 1 to 2%. All right, so definitely something to keep in mind. Now, I want to tell you another story which I think is very relevant. QM loans, which is the first bucket, right? The ones we're most associated with, is a phenomenal foundation for anyone who's thinking about getting into lending. And the reason is you get to learn about all the moving pieces. So as an example, me and my kids like to play with a Rubik's Cube, right? And the most original Rubik's Cube is the 3x3. And how is that relevant? Well, because once you know how to do the 3x3, it kind of sets the precedence as the foundation of all the other cubes. So you could do the 4x4, the 5x5, the 6x6. It's literally very similar plus one more move, all right? And so it's kind of like the same thing. It's great, and I think it's phenomenal to get into lending and really master this skill, but just understand that this whole QM shop, or this bucket, is really about 25% of the business. And I think to kind of tie this into the title of this video, 4 ways that you can get paid as a mortgage loan officer, if I was only doing this, there's a very good chance that I probably wouldn't make enough money in this industry to be happy. And so I think it's very, very important that you understand that knowing how to do the others is super important to you being able to make money in this industry, all right? So with that, let's shift gears and talk about non-QM, all right? So what exactly is non-QM? And by the way, guys, I'm gonna cover a lot of ground, so if you have any questions, just drop them in the comments below. Let me know, because this bucket right here is the standardized bucket. So you're gonna be qualifying people with W-2s, tax returns, minimum credit scores of about 620, all right? To get started, using income up to about 50% of their gross income. So everything is very standardized until you shift gears and you move over to the non-QM buckets. Now, most of us don't think about this when we get our mortgage license, but if I was going to work with a lot of self-employed borrowers, most of those borrowers who run those businesses, think about this for a second. If you're a business owner, you may or may not be, you have your top line, which is your sales, right? That's how much the business sold. And then you have the laundry list of expenses, and then you have your net income. And so to qualify somebody, I'm clearly not looking at their gross sales, right? Right here, I have to look at their net income. And so the difference between lending and obviously filing your taxes is when you're trying to get a loan, you're trying to show the most amount of income that you possibly can. And when you're filing your income taxes, you're trying to show the least amount of income that you possibly can. So they contradict one another. This is where non-QM shines, because when you have that self-employed borrower, you can go back and literally put the taxes aside, you're not gonna need them for this type of a program, and go back to the borrower's deposits. Like 9 out of 10 times, you're gonna be able to get a lot more income from the borrower's bank statements, business bank statements, than you will from their tax returns. And the reason being is you can dictate based on an industry what the expense factor would potentially look like. Now, it's not in your hands, and let me explain that. I wanna stay on target. In non-QM, you're qualifying people using alternative documentation. So things like bank statements, things like a CPA or a enrolled agent prepared profit and loss. And so it's up to that CPA or that enrolled agent to dictate based on the information that you're receiving from them what the expense factor is for that business and how they came up with that net income. Okay, hopefully that makes sense, right? Because say you have 12 months worth of deposits, business deposit, and say that adds up to, let's just say $100,000. Well, that's the gross income. How do we know what the expenses are? Well, we're counting on that CPA or enrolled agent to tell us what is the expense factor of the business. And as example, if it's construction, it's standardized to be about 50% because you know there's a ton of expenses there, right? Materials and so forth. So you can literally use 50% of that income. That's your net. And from that, you're using 50% to qualify, all right? We're getting deep, but that's what non-QM looks like. My point is, do you see that comp plans here are 1 to 2%? Comp plans here are also 1 to 2%. So if you're only doing this, and by the way, this is me working at the local bank, only doing this, and if this is an average comp plan, I'm getting paid 0.5% only doing this. Does that make sense? Like why it limits the amount of money that you're able to make so much? And that's just 50% of the picture. Again, questions, drop them in the comments, because as I go through this, you might want to jot this down, especially if you are somebody who's trying to get into doing this right now. It's important that you understand that over here, obviously we've discussed the qualifier. Over here, similar situation, using 50% of the income, right? Based on whatever is being dictated to you. The credit profile probably pretty similar, but the loan limits may be higher here depending on the type of program, right? Again, don't want to get too details into this. Now let's go into bucket number 3 for a second. And bucket number 3 is private money. All right, so we have 1, 2, 3. All right, private money is huge. And again, if you're working at the bank, more than likely you're not brokering hard money deals. Now I want to talk to you about licensing for just 1 second. Over here on both of these guys, you're gonna need an NMLS license. All right. As we shift gears into over here, you're not gonna need an NMLS license. You just need, depending on the state that you're working in, to be, if the state requires a license, more than likely it's gonna be a real estate agent license under a licensed shop, which is the broker shop. Think about it very much the same as you would if this was a real estate office. Literally the same. You have the broker, which is, could be any franchise, a Sotheby's, a Berkshire Hathaway, a Century 21. I mean, there's a million of them, right? That is the broker. So when the real estate agent gets paid, they're not the broker. So Century 21 gets paid, and then the agent might have like a 70-30 split, right? So the house, Century 21 keeps like 30%, they pay the associate 70%. It's really the same thing, right? You're the associate. So the shop needs to be licensed as a broker, and then you need to be licensed under the shop. Now, according to ChatGPT, only about 6 or 7 states actually require a license, which means that if you're moving into brokering private money, these deals can actually close in about, let's just say 10 days, all right? You could close them even sooner. You could close them in a week. And if you can earn a commission here of an average of say 2%, and you can do it in 10 days and you don't need a license, imagine how quickly you can get started into making money on this. And you might say, oh, is that popular? Well, I can tell you that the private money guys that I know have consistently made more money than me offering just this because it's been so lucrative. They spend so much less time on every single deal than I do because there's nothing to size up. It's basically asset-based. So what does that mean? If a property, say, is worth 100,000 and they're willing to lend up to 60%, you have 40% equity, that's literally 80% of the qualifier right there. There may be some consideration to credit, there may be some consideration to assets, but very, very small consideration. All right, that's why these deals move super quickly. And I gotta share one other thing with you. As you go down the list here, this is most complicated and you earn the least. This is less complicated and you earn more. This is less complicated and you earn even more than over here. And then the last one, which is gonna be number 4, is gonna be commercial. And I gotta be honest with you, I just funded 2 commercial loans this month, and yesterday we funded a residential deal, a non-QM deal. And I would say the workload between here to here, this was twice as much work as probably both of those deals, because you have a ton of support on the commercial side. Same type of a licensing situation, you know, you need to be in the states that may require a license. You're gonna need to be an associate under a broker. For all the other ones that don't, which is, I would say, the majority of the country, you could literally just operate under an LLC. The only thing that you don't have here is you have the product, but you don't have the skill, right? And so that's why in the beginning of this video, I mentioned to you that I've developed both the part-time commercial lender academy and the part-time residential lender academy, and both of them are available via link in the description, because if you wanted to learn how to broker commercial and private money, then all you have to do is just go through the academy, and literally the whole roadmap is there. All my proprietary work that I've developed over the past 10 years, where you could literally just plug and play into it and start building yourself a business where you could literally do just this, because this is honestly all I do. This is my work. I do this full time. And I'm not telling anybody else to do this because I've been doing this, full time, right? You have to start with baby steps. Keep your full-time job, ease into it, start, understanding how this works, get deals in the pipeline, and then over time, you can significantly supplement or even replace your full-time income just doing this, because private money and commercial, there is no geographical limitations. On non-QM, there is a program called DSCR, debt coverage ratio, which is very popular for investors, basically using rental income from the property to qualify the whole transaction, and it's available in the majority of the country without a license. So that kind of takes us back to square number 1, where we started, which was qualified mortgage agency loans that are sold to Freddie Mac, which when I started was the only thing that I thought was available, all right? And so the secret, if you want to call it that, to my success is twofold. One, it's understanding that there's a lot more available in terms of product to be able to get paid significantly more and in more avenues as a loan officer. You don't need to classify yourself as a residential loan officer, because I feel like that is literally just working with one arm. You should have both arms available to be able to make money in both residential and commercial. And you know what the funny thing is? You could broker private money for both residential and commercial equally, all right? It may just take you a little bit longer to put together a commercial deal, because third-party reports, which is appraisal and environmental, typically take 2 weeks over here. So this might be more of like a 3-week deal if you were gonna do a private loan, all right? I think that's all I got for you. I hope you've enjoyed this. Again, if you have questions, drop them in the comments. You want to check out the academies in the description. This should give you a ton of value, because legitimately, no one talks about this. And if you're thinking about getting into lending and you really want to know, is there a paycheck on the other side of this? there's absolutely a paycheck, but you have to take it seriously. This is, like I said, it's a full-time job. Understanding, learning, developing, not a side hustle. What we saw, like 3 or 4 years ago, like a surge of people jumping into mortgage business because rates were super low, doesn't really mean anything. Those were used car salespeople just jumping in to make a paycheck, and then a year or two later they're out because rates came back out. This is a standardized market, and this is a standardized model. 100 years from now, this is probably going to look exactly the same as it does right now. I'm pretty confident, very similar to this. So no matter when you decide to get into this, like I said, this video is evergreen. All right, I appreciate you guys. Thank you for being here. If you like this video, please give it a thumbs up so other people like yourself who are looking for this information can find it. It's a lot easier when you give things thumbs up for the algorithm to understand that they're relevant to what you're trying to find. If you want to see more videos like this, please subscribe to the channel. Otherwise, I appreciate you. Thank you for being here. Good luck with your journey. Good luck with whichever way you decide to take this. All right, and I hope to see you again on my next video. Take care.